Hey guys, Todd here. This is the free video update for what it's going to be. Wow, Thursday already, November 13th. And we're tracking Yahoo tonight. And it's stock that's just been going crazy. And as much as you want to buy it, we have to just stay patient right now. Let the wave count dictate when we're in, when we're out. And here's what I'm seeing right now. Okay, so this is a 3 hour of Yahoo and we have been in a consolidation ever since January 7th. So we went through here in anticipation of the Alibaba IPO, all that fun stuff. Finally, in July 17th, we are over. And this is a very complex wave 4. Don't worry, leave that to us. We'll tell you when the correction's over. So now we're free from wave 4, and we're rallying in wave 5. Okay, wave 5 will break down into 5 smaller waves, and that's how I have it laid out here. Orange 1, 2, 3, 4, 5. Okay, now wave 3 is ongoing. And wave 3 is usually your big breakout wave, which is what we saw. We saw a nice little breakaway gap here, and then we moved pretty sharply above the wave 1 high. So fine, looks like we're in a pretty good third wave. This, by the way, was a very sweet ABC pullback, which is very common in wave 2. A was perfectly equal to C. It was just a really sweet little pattern. So now we're moving higher in wave 3. Okay. Now wave 3 is, like I said, a big breakout wave. So it's usually longer than the distance traveled in wave 1. Okay. Equality is 100% right there. Okay. So that was at about 47 and a quarter. A lot of times we can get up to the 1.618 relationship of wave 3 versus 1. So basically if wave 1 was, let's call it 10 bucks, wave 3 could be expected to be about $16.8. That's it. All right, so if you do the 1.618, that's at 54.13. So we have a little bit more time. We're at 50 and a half right now. We do have about another $3.50 to $4 to go on the top side before we settle into wave 4. Okay, so if you're going to be long, you need to be very careful doing so. All right, one trade that we can look to do is rather than chase and buy up here at the highs, you could actually look to play a short premium play. Once we have evidence that wave 3 is in play, we can then look to trade wave 4. How do you do that? Two ways you do it. First, you do the time elapsed in wave 2. Okay, and you project that out. Let's say wave 3 ends on this day and we go into wave 4. First thing you need to do is time elapsed that way and go that way. And the way we're going to do that is we're going to go time analysis 4v2, and we can see that equality will be on December 10th, and 1.618, which is very common, be December 22nd. All right, so we got a month and a half. So once we are in wave 3, guys, you could then go into a short premium strategy, selling call credit spreads topside, or if you want to get aggressive, you could sell call credit spreads and put credit spreads, create an iron condor. You could sell a straddle, you could sell a strangle, any short premium play will work. I mean, depending on, as we move into the trade, but, using the typical 4v2 time relationships, you'll know how to set the strikes would be just around those December expirations, because that would be a very typical time for wave 4 to kind of encompass or to exist within before we begin rallying in 5 more waves up in wave 5. Okay, so that's a plan for you in Yahoo. Short term, we have resistance up about $4 above us, but then we should go into a 4th wave that lasts about equal in time and often longer out to that 1.618 relationship of 4v2 before we rally into year end. All right, guys, so that's your trading plan for Yahoo. We'll be looking to position this with our clients. And also, guys, I will be in Vegas. So if you are around, we are doing a couple presentations. I'm actually doing a premium presentation on intermarket analysis. So it's going to be about a 4-hour presentation. So I have one of the premium guys show me the money, my top 5 trade strategies for trading the 4 major asset classes professional. Okay, one of the most important relationships we're going to be talking about here, and this is wow, this is coming up. It's about a week and a half away. One of the most important relationships we're going to be talking about is this. Okay, this has changed everything here this year. This is the dollar futures over the S&P. And you can see for a long period of time, they're trading inversely. Okay, so I mean, pretty clear inverse relationship there, dollar S&P. But now look what's happening. Now we're trading together. Very interesting. Okay, this was actually the case leading up to the 2000 Nasdaq high, when the U.S. was the strongest investment internationally, so that lent itself to U.S. dollar strength. So we're starting to see a return of the dollar and S&P trade together, which is very interesting and quite atypical. Because usually they are trading against each other. All right, guys. So if you're in Vegas, let me know, and we'll have some fun together. And I will talk to you guys in the next video update. See ya.